All right, so today is April 29th. Today was not a news driver day. Um, I did not, actually, I traded today, let me not lie. I traded micro sessions, and the goal was to just make 100 points with one micro contract just to get a feel for not feeling nervous while trading. And we lost twice, ended up waiting for this move down here, got in for a couple points with a mini. And net gain. So we're green on the day. Uh, but what we want to look at here is the AM session. We have classic accumulation, manipulation, distribution. So accumulation here, manipulation here, and we have our distribution here, right? And we have our 5 minute change set over here. And why this one and not these over here? Well, time and price. So we have the time element. Now we need, oh, we have the price element. Now we need the time element of it. So that's where the 9:30 open comes in, right? And this is our Judas swing. And we took out London highs here. Okay, so if we take this here and flip this up, projections here, we have 3.5, boom. After we have our 3.5, we can expect a reversal, right? So it's for standard deviation. The reason why this is also accumulation, manipulation, distribution is because we have stage one here, stage two here, kind of stage two here of the market maker model, and we take this non-closing candle here for standard deviations, boom, terminus, almost mean threshold of this accumulation. Also to the left here is where we started for the sell model, and we have run down, um, taking out these lows here. Ideally, these lows here. Stage one, come down. We're looking at this one. Run up, stage two, boom. And here we have our manipulation leg. And we can take this, look for 2.5 for our, oh, what do you know? 2.5 is where we get a smart money reversal. Boom, that lines up right there. Or we could take the last OB here for a standard deviation that lines up here. So that gives us conviction that, hey, yes, we are at the end of the market maker buy model. We're consolidating. We have 9:30 open coming up, and we also know that we have a Judas swing. So the expectation is that we will run up here, then come down. Okay, because we just came out of a buy model. So expectations go into sell model. Going down to the 1 minute time frame, we have, let's just keep this here. We can measure these down closing candles here. Let's make it a little bit larger. 2.5 is here. This is our reversal. So we have a confluence here, as well as what on the 5 minute of that manipulation leg. So the last will be here. Change to delivery. Confluence with these down closing candles, and they're almost identical in the measurement, but nonetheless, reversal and terminus all align, as well as that 5 minute OB from over here. I think it was like, yeah, this one right here, 2.5. Yeah, see, boom, this all lines up. Perfect. So those are confluence that we can rely upon. Now let's drill down a little bit deeper, because once this has been completed and now we're moving up, we have 1, 2, 3, 4 minutes for price to come up here. So it gives us plenty of time for us to go down to a 15-second time. And now what are we looking for? Our last OB for a projection up. And we're looking for either negative 2.5 here or terminus up here. But notice how we have our confluences up here that lines up nicely with this here. So where can we enter in? Let's say we wanted to aim to get up at this 2.5 here. Ideally, right here is where we would want to get in. which is right here, and 10-point stop loss, very right here. So came real close again there. And now we want to go back to a higher time frame where we saw the setup take place, which is on the 5. And we want to take our manipulation, which is right here, and then extend this down to 2. Or we can go to London or these swing lows down here, which is terminus of this market maker model. Maybe measure on these, we can get down there 4 standard deviations, which is here is 75 points. Or we can take this all the way to the weekly open low, which is over 100 points from this morning. So very good trade. Um, the process is becoming clear and clear every day, and we'll just continue to back test and look for these setups every single day. And eventually, when we are in the moment, we won't consume nearly as much energy to just simply put a goddamn fucking fib on some order blocks and what have you. The second thing I wanted to look at was, I mean, this run up here is nice. It's like a twin run up, come down, run up, boom, back down. It was this here. We have this run down here, bullish order block, equilibrium or mean threshold supportings, run up. This is stage 1. Here's stage 2. This is the 5 minute. We can run this up here. -2, 2.5 is where we expect a SMR, smart money reversal. And over here we have this 5 minute bearish shorter block that we are digging into. I think this is equilibrium right here. This right here is equilibrium. And that's exactly where we go to, lining up in the area for a reversal on a lower time frame. So we go to the not lower time frame, but this reversal. Go to the here. So we have market shift here, kind of stage 1. These aren't the cleanest stages. But stage 2, this is very definitive stage here. And then boom, boom, we're going, we run up. Also, we're running into a new quarterly shift, so that's where we can also expect to have a change in structure. So if we take this last one here, 2.5 is where we go to exactly. Oh, 2.5 is where we go exactly. Boom, nice. And then we go down. Going down, what do we expect here? If we did not get in right there, we do have a optical trade entry. This here is drawing liquidity here. Market structure shift here, run down, run up. Here is optical trade entry, which almost aligns with the New York PM session open. Run up here, boom, and then we're going down. Yep, 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 yep. All right, so that was one thing. And then excuse me, down goes Frazier. So let's take a look at this one, this wick here. This first deviation is down here. I don't know, at that point I was playing around. So where I got in today, I didn't read price action coming in very, very well. I didn't, at least in the afternoon session. Um, I got to be better about looking at the entire day and building that narrative going into where we are today. Because I was seeing this as accumulation. I was thinking that we would, come down here. This is a reversal point, which is valid. That's fine. But look to the left. This is stage 1, right? And then we have this fair value gap down here and these lows down here, and then more lows, and then this New York AM session low is down here. And we did not get our, sure, stage 1. Where's our stage 2? We didn't get a clean retracement up for that to become stage 2. And so we then drop, boom. And then we run up. And from here, which one is this? This one? Yeah, fib. So we run up, and I did have this marked after the facts. Came in here, it was like, all right, let's go in, get in long. So I like this 1 minute train instead delivery. Not the best setup or highest probability setup here. And I did have this marked out, wanted to come up to these highs up here because the risk reward was better, but don't be fooled. We come up top of trade entry, run up, boom, down we go. And we can just measure this here, this last one here, and high time for projection. And where we go, 2.5 is right here. That's where we accumulate, manipulate into Q3, and then distribute, right? You see that? See here, accumulation, manipulation, and then we get our distribution down here. Where is this all happening at? Optical trade entry of what? This stage down here. And what does this become? Stage 2 distribution. Stage 1, stage 2, boom. There we go. So good job here. Doing, what you're supposed to do. But again, you just want to wait for your stage 2, right? Kind of a risky play here, but you stood in, took your profits, ran, couldn't watch it go all the way up, but we ran. Yes, this was a inverse fair value gap. But again, stage 1, stage 2. Accumulation, manipulation, and then we can take this over here. This is the last one. Oh man, why does it do that? I don't know why it does it. Maybe because I have, I don't know, but let's just measure this one here. 2.5s, where we go to? Yep, here it is. So we didn't quite get all the way in there, but nonetheless, um, this price leg here, this is optical trend entry. I mean, you can't get any better than this. We can come down to the 15-second and notice that, we could take this OB right here. Take this OB right here. And, same thing. So, and also this New York lunch open right here as well. So use all those jumble up together, plus the fact that we are going into a new quarterly shift here to go down. So in our combination, we have, let me look at this really quickly. So I thought OT, quarterly shift, high time frame breaker block or order block, fair value gap, New York open, high time frame breaker, high time frame proponent interest, OT quarterly theory, AMD. That's what we have here. OT, optical trade entry, quarterly theory. We're shifting from Q2 to Q3. Shifting from Q2 to Q3, 90-minute cycle. And then AMD. Here's AMD, manipulation, distribution. So let's add this here. This is going to be March or April 29th. And I'll just add the link to the video right there. Oh no. Yep, so that's that. And then I don't have any projections here. Um, this it's not gonna go. So down here, I don't know what projections we've been looking for. Maybe on the 15. I don't know. Maybe this here on the 15. Possibly, but again, I can't say that we had any clean projections for today. Right, so we can look at this one again. We can do from here to here for, it's not bad. Previous day high is up here, and then we have New York standards touching lows on here. That's not bad whatsoever. Um, Now I went away, help out family, came back at the gym, and I wanted wanted to take a look at what we had here, and I saw that we had this aggressive move down. Then it occurred to me that yes, this is stage two distribution, and then we have these two candles right here. I like this a lot. This is a nice change of state delivery at the end of our market maker sell model. 4 standard deviation lines up where we came to, as well as this fair value gap here. This is stage one. Um, so I got in here. I had my stop loss again too tight, got nicked out, but this would have ran all the way up here. So very good trade. I have a note here to look at the 15 second. So let's take a look and see what's to it. All right, so all this here, this fair value gap here is the what fair value gap is this? 4 hour. This is the 4 hour SIBI that we inversed here. This came back down and touched it. That's all that it is. 15. We can get rid of this. So we have a very clean and distinctive um, manipulation leg. One, two, three, four, five. Kind of run. Let's take this low here just for the hell of it. And boot that up. And here's 4 standard deviation, which lines with the high of the AM session right here. Right? Nicely done. So, um, so that's that. What else do we see here? Low, high, lower low. This is a bearish short bullish breaker. And do we ever come back down to it? No, not really. Model 2022, drawn liquidity, market structure shift come down. No, not really. That's all good. But yes, this is here we have our last OB here. Change that delivery, we come down to 1.5, and these areas I consider as like a retracement. This is the ultimate area for a reversal. This is our terminus. So when I see this, is confirmation that hey, we're on the right side. We also have one, two, three, four, five candle run on a 1 minute. This is inside bar. Really not gonna consider that. So that's it. So all in all, very good day, very good trading. Again, continue with your micros and continue with your micros and trade one. Try to get up to 100 points, and then go on with five, get 100, and just keep that going and build those new neural network connections, and we'll be good. All right, peace.